Right now, crypto is a $4 trillion asset class. Oh, but that guy's made 100x and he made 1,000x and I need to do that. You don't need to do all of that stuff. Put some money into crypto. Particularly if you're young, you can take risk. Look at all the rich people in the world. Did they trade to get there? Most of them didn't. Put all of your savings into this. If we just follow the trend rate of growth, I think by about 2034, it's $100 trillion. You can make a lot of money. So it becomes blindingly obvious that this is the answer. Bitcoin, Ethereum, Solana, don't trade it, don't do anything. Just keep buying over time. I've seen people go from 10 grand to a millionaire in less than a year in this space.
Macro investor and Real Vision co-founder Raoul Pal is doubling down on his prediction of a major crypto bull run, one he believes could stretch well into 2026. In his latest market update, Pal says every key indicator is flashing green, signalling that the next big acceleration phase is already underway. Historically, these setups have fueled explosive rallies across the crypto space. But there's a twist. Pal warns that Bitcoin dominance may be peaking, setting the stage for a rotation into Ethereum and other large-cap altcoins. He believes ETH is perfectly positioned, with institutions and mainstream analysts now floating price targets that once seemed unrealistic. Bitcoin currently trades around $121,000, up over 9% this month, while Ethereum holds above $4,400 after a solid run. According to Pal, this is just the beginning. If his liquidity thesis plays out, we're entering phase 3 of the banana zone, a high momentum period where prices can go parabolic. He maintains that crypto remains the best hedge against currency debasement and the most asymmetric bet in global markets. Let's jump straight into Raoul Pal's latest interview and break down why he believes the crypto bull run is only getting started. And as always, drop your thoughts in the comments and make sure to like and subscribe for more market breakdowns like this.
Bought it and sold it, but have held on for a very long time. And all of my net worth is basically in this. In my liquid net worth is in crypto. So it goes up massively fast. On average, about 145% a year. We're all told to put our money in a 401k and they put it in the S&P 500 and it goes up 12% a year. So if 8% of it is currency debasement and there's 3% inflation, you're actually not making money by investing in the S&P 500. But that's what you're told to do by the system.
Little gold nugget for you guys. So here Raoul is talking about how investing in a 401k, a Roth IRA, or the S&P 500 isn't going to get you as good of a return as Bitcoin. But thanks to today's sponsor, I Trust Capital, you can actually get the advantages of both. See, these guys let you buy Bitcoin, ETH, Solana, over 100 cryptocurrencies, all inside of an advantaged IRA account. I just transferred all of my accounts over to them so I could get the same retirement benefits with assets that actually have a chance of beating inflation. So if you guys don't want to miss out on the biggest wealth transfer of our lifetime while still being smart with your money, head over to itrustcapital.com/Jack Neel. Just make sure to use the promo code JACK8 for an easy $100 sign-up bonus. Anyway, guys, back to the podcast.
Yeah, you could buy some tech stocks and they go up a bit more. But crypto's a complete paradigm shift. And so what it means is anybody can put in 10% of their monthly wage, however rich you are, and you can compound wealth at 100% a year, let's say. Okay, that's really powerful, even though it goes up and down a lot. So it can go down 70%, 80%, but over time, it just keeps going up. And that's based on the fact that it's essentially a network of money. The more people who join it, the more the value goes up because we're buying it. And the more activity that happens, the more valuable this whole thing gets. And then there are other cryptocurrencies that came, like Ethereum, that give you a smart contract, which is a whole way of programming the internet all over again. What we're creating is not only a new internet, but also the internet of money itself. So we're creating a whole new layer that people don't see yet because they think it's all a bunch of nonsense, but really it's just the future of the internet where money is embedded within it and value. So we talked about how you and I could get paid to capture our attention. This comes all on these rails. So if we're transitioning into this new system and we can all buy a bit of it, we can all make quite a lot of money. So you either get a choice. Do you buy the S&P 500, which is what you're told to buy, or you buy crypto, which grows at a lot? So then you start to realize once you do this for a period of time, you end up thinking, oh, fuck, I don't put enough into this. this is my answer. And the more people use it, the more the value goes up, the more it unfucks everybody's future, because it's a different system than that fiat system that we talked about before that keeps getting debased. Right now, crypto is a $4 trillion asset class across all of the different tokens and protocols. A lot of this is just technology. So if you think about the internet when it rose, we couldn't invest in it. Eventually, we could buy some shares in Google and stuff, but it wasn't the internet itself. Right? It's businesses built on top of the internet. Here we can actually own the internet itself. And everybody can. So it's like a public service good that we can all buy some of. Okay, that's amazing. It's currently worth $4 trillion today in its current form. If we just follow the trend rate of growth, I think by about 2034, it's $100 trillion. So at only 4% of the journey. And this is why you can unfuck your future. If you're only 4% of the journey, you can make a lot of money. And you finally get to participate in this global internet infrastructure layer and a new system of money, and you sidestep all of the debasement of currency, and you're leaning into the future of AI because the AI are going to pay themselves using cryptocurrency, and you avoid all of the other issues we've talked about. So it becomes blindingly obvious that this is the answer. And what's amazing is you go and tell your parents or friends, and they just think you're an idiot. They think it's too risky. And then you say, but they don't understand that every year they're losing 8% of their money just by keeping it in a bank. And over 10 years, you've lost basically all of your purchasing power. You've got virtually nothing left. And this way you do the opposite. You start compounding gains really fast. And then they come and laugh at you every time it falls 70% every 4 years. And what you need to do at that point is just keep buying it over time. And every time I've done that, it just keeps compounding. So we've never had an asset that's done this before. How fast is it growing? The internet, it's growing twice the speed of the internet and has been since the first 5 million internet users and the first 5 million crypto users. I've measured them since, and crypto.com does so. It's been growing at twice the speed. So this is the fastest adoption of any technology humanity has ever seen until AI has just come and beaten it. And again, the newspapers will tell you it's a scam. It's too volatile. It's never going to work. It's going to go to zero. Yet it's the fastest adoption of any technology that's ever been seen, and it's done whatever, 60 million % return since 2012, and it started in 2009. When you measure it from that, the numbers are so stupid it makes no sense. And even if you look at it in more recent years, even after the big drawdown in 2022, still doing 50 or 60% a year at worst. So you don't have to do a lot to unfuck your future. You just need to put some money into crypto. Particularly if you're young, you can take risk. It can go up and down. And we'll talk about the crypto risk curve and not fucking it up, because that's the other thing, is don't fuck this up, which is another important thing, is once you get there, you start thinking it's a casino. Oh, but that guy's made 100x and he made 1,000x and I need to do that. You don't need to do all of that stuff. If you're not careful, that's how you lose your money, is by playing the casino. You don't need to play the casino. You just need to buy some high quality assets and do nothing. Look at all the rich people in the world. Did they trade to get there? Most of them didn't. Jeff Bezos just held Amazon shares. Elon Musk just held a few company shares. All of these people have made it from basically one bet and just holding on and letting the gains compound.
You said $100 trillion by 2030, right?
Probably 20. Let's call it, if I look at the trend, it depends, somewhere between 2032 and 2034.
Got it. Okay. And then for reference for people, what is the market cap roughly of the entirety of the S&P?
The global equity market, all of equities in the entire world is, I don't know, something like 100 to 150 trillion, 200 trillion, let's say.
So do you see this wealth being transferred there?
Well, if you think about it, it's not only the wealth being transferred, but all of the companies are already talking about, oh, let's stop using the internet rails and the rails that we use for equities right now, and let's put them on crypto rails because it's more efficient. We know who owns it. It's faster. We can get... And the bond market's doing the same. And the stablecoins is just the US dollar going onto the same. You can hear it. It's a supermassive black hole sucking everything in. The whole financial system moves to it. And it's the infrastructure layer for it all, plus this savings layer, which is, let's call it Bitcoin as like the version of gold. And then we've got the ability to invest in this and it generates tokens. Of course, it's going to be worth 100 trillion and likely a lot more over time.
So for clarification, since I'm a bit younger, did Bitcoin trailblaze the whole idea of fractionalization of investments? Like you used to have to buy a stock, like the full price of that stock before, and the stock price would split. So Bitcoin was like the first thing that you could buy fractionally?
Yeah. Basically, you had to buy. I remember when Berkshire Hathaway, Warren Buffett's famous company, used to have a share price of whatever, X $100,000, and nobody could buy it. And he had to have a second version of the share that was cheaper, like a tenth, so people could buy it. So you couldn't fractionalize anything. And sure, Robinhood and people have experimented with fractionalization, but crypto was the thing. Like, you could buy a minuscule amount of it. Because I think even within its design, it was realized if it does work, it's going to go to 1 million or 5 million, and you can't price people out of it. It has to be the system that everybody can afford. And this is not just a United States thing. I mean, crypto is literally unfucking people's futures, from people in the rice fields in the Philippines to South America to Europe, all over the world. This is the 600 million users. No more. It's like 900 million users by the end of this year. And so what you're doing is changing the outcomes for people, where it doesn't just have to be the rich. Sure, the rich can buy this too, but everybody's on an equal footing. So if you go back to that, so let's think of an apartment in Fifth Avenue. It goes up more than other apartments in New York because it's scarce and it's in the right spot. Who can afford it? Nobody, except the very, very, very rich. But the house that you buy in the middle of Ohio doesn't go up. Why? Because rich people don't want to live there, and you can build infinite number of houses in the middle of Ohio. So it becomes an issue. So the rich people own all of these assets. The Berkshire Hathaway share, before they made it smaller, well, only rich people can afford it. But here you've got an asset where everybody can put in 10% of their savings.
Is that your general recommendation for, let's say, the teacher or my sister? She's a researcher going to become a professor. I've kind of told her to allocate maybe $100 a month. But then there's the flip side of this, which is pretty common today, is like the young entrepreneur, the young freelancer that's investing back into their business. Like me, I used to own a significant amount of Bitcoin, but I've recently, or maybe 2 years ago, transferred most of it to cash just so I could reinvest into the business to get a more outlandish return. Like, how do you kind of tell those two people how to invest?
Okay, firstly, it's actually pretty hard to build a business that grows at 145% a year, every single year.
True.
And I've realized that. I mean, I've got friends of mine who discovered Bitcoin back in 2011, 2012. They've never done anything again. And they're like, people come to me for investments. They're like, show me that it's actually going to do better. I said, do you not build a business? They said, what's the fucking point?
If I didn't sell, I wouldn't have to be doing business right now.
Okay, so that's my point, right? That is my point. And if I hadn't sold when I first bought it, I wouldn't have to do anything ever again either. And we can do it because we choose to. My general theory behind this is, if you don't have much savings and you're young, put all of your savings into this. And I know that sounds obscene, but this is the only way. So put as much as you can in. If you're building a business, invest in yourself too. Okay, great. So anybody under the age of 30, just go for it. Just don't screw up by buying stupid meme tokens and expect it to 1000x. Sure, you can play around with 10% of your money. Just keep it in like Bitcoin, Ethereum, Solana, Sui, these kind of big networks, and just let it compound, let it do its thing. Don't trade it, don't do anything. Just keep buying over time. It's called dollar cost average. Every month, add a bit more in. And then you can play around with some other stuff because it's fun, and that's okay. you can invest in yourself, and if you start generating more cash flow, then you put more money in. Okay, that's a decent idea. So in 7 years, the whole market's worth 100 trillion. So that's what, 25x from here? So then you just work that back and say, if I put 10 grand in, it's worth 250,000. So if I put 40 grand in, it's worth $1 million. Okay. But Bitcoin is not necessarily the fastest horse in the race. It's the least risky. Could Ethereum or Solana or a mix of those do that faster? For sure. So I've seen people go from 10 grand to a millionaire in less than a year in this space.
Raoul Pal says this kind of pullback is perfectly normal. It helps flush out weak hands and reset leverage before the next move higher. He highlights Bitcoin's strong link to global liquidity, which he says remains supportive even with a few short-term dips. According to Pal, the market is setting up for another big leg upward. Bitwise CIO Matt Hugan agrees, pointing to the classic dip-then-rip pattern where sharp drops are often followed by massive rallies, sometimes as high as 190%. Their message is simple. Don't panic, be patient. Pal believes we're entering a critical phase of the crypto cycle, and he's already increasing his positions in anticipation. He expects major institutional inflows, predicting crypto could grow into a $10 trillion asset class. He also says this cycle will be different from past ones, as currency debasement and global adoption drive new capital into crypto. For Pal, Bitcoin is headed for unprecedented highs, and the market is on the verge of a massive shift, what he calls the banana zone. Still, he cautions that Bitcoin is trading more like a risk asset. If markets rebound, Bitcoin should surge, but if uncertainty lingers, short-term pressure could follow. Either way, Pal believes the next big move is coming soon.